I think what we're going to talk about today is something, any one of the three main ideas that I discuss has the potential to really change things in your life if you like what you hear and you do your own research and decide to do something about it. The same way with some of the other things you hear here at the conference. George Gilder talked about one of the things that I'll be discussing today, which is a new way to have money that's asset-backed rather than backed by an idea such as Bitcoin or Ethereum. My name is David H. Smith. I work with David Morgan of the Morgan Report, and I write a monthly column for Money Metals Exchange. I'm also an ambassador for the Load Cryptographic Silver Project, and we'll be discussing these things as we move forward. There's no one coming after us. There's a period there before the next individual comes in, so I have time, and I'm willing to spend the time that you need to answer your questions afterwards and to be around here and help you as much as I can to help you with your knowledge base so that you can take the information, add it to what you have, use your own personal circumstances, and put it together in a plan for you if you decide it's something that makes sense for you. So these are not advice, this is not investment advice, it's information that you can use however you see fit. I think that the greatest bull market that we're going to see in our lifetime in the precious metals and the mining shares is underway right now. It really got started in the public sense when gold made 6-year highs a few weeks ago above 1360, something it had not been able to do for 6 years. It's been in the bear market for 8 years, and since it made an all-time high in nominal dollars, about $1,923 in, I think it was September of 2011. Silver topped out earlier that year, close to $50 in around the end of April, early part of May of 2011. I believe we're going to see new all-time highs within the next couple of years, nominal highs that'll take silver to 3 digits and gold as high as $5,000 to $10,000 an ounce. And of course, the mining shares would be on steroids under that kind of a scenario. Standard disclaimer. These are the things that people are here today because they may have made an error on one or more of these things. And you didn't buy the last rise going into the top in 2011, or maybe you held on to the mining stocks and they dropped 80%, or you were in the Bitcoin or didn't get in at all, but maybe you bought Bitcoin at 1,000, rode it up to 20,000 and rode it back down to 3,000. Or you may have not heard of a eWaste project, which you're going to hear about today, which grinds up electronic waste and takes the gold and silver and platinum and palladium out of it, and it's a yield that's many times of what a gold mine does and doesn't create any toxic waste in the process, doesn't use cyanide, doesn't burn it, doesn't put it into a landfill where 80% of the e-waste goes these days. So this is your second chance to get on board these waves, and if I'm even partially correct in my anticipation for these, there's going to be a lot of profit on the upside, and the risk reward should be very good. This is the book that David Morgan and I co-authored called Second Chance: How to Make and Keep Big Money During the Coming Gold and Silver Shockwave. And I have a few copies left, as I mentioned today, that I'd be happy to sell you a copy. This can also be purchased on Amazon and ebook version, that type of a thing. There are a lot of books that tell you, quote, how to make a lot of money in the mining sector, but I haven't run across any that tell you how to keep most of it. And that's because most people want to make a lot of money, but then they don't sell, or they sell way too soon. They tend to ride all the way up and all the way down, just like most people did in Bitcoin. And it's not much fun when you ride it back down. It's a lot of fun on the way up. But there's a way to get around that, and we have a plan that accords with human nature that should enable you to keep most of your money and still have some in if it keeps on going a lot farther than you thought. But when it finally does top out, you will not be sitting there with all of your money in it and then give it all back. What these stories that I'm going to talk about today have in common is that they're asymmetrical trades, which means you can risk a little to make a lot. You don't have to margin your house, take a second mortgage to do these things. Just put a modest amount in after you've researched a particular story or company, and it has the potential to do a number of times what you put in. The best way that I have found to get yourself ready for something is to follow the ODA loop: observe, orient, decide, and act, that John Boyd put together. And he did this when they were trying to figure out how to shoot down more enemy planes in the Vietnam War. We were losing a fighter plane for every 2 that we shot down on the other side. And when he taught this way of approaching things, the odds went up to like 6 or 8 for every one we lost. That's quite an improvement. So you observe what's going on before you take any action. You just don't go out and you hear me mention the name of a stock and you buy all that you can on Monday. That's not how it goes. You do the observation piece. You ask yourself, what's going on in the big picture around all this in the world today? This bear, this brown bear, came down out of a little hill where I was fishing about 30 feet away, and he didn't jump in the river to catch these red salmon that you can see here in the middle. He came in very quietly, got into the water, and stuck his face in the water and looked around. That's called snorkeling. And that's what you want to do. You don't want to jump in and make a big splash. You want to get to know what's going on and feel comfortable that you have your handle on the picture. All the things that are influencing gold and silver to rise, which is all the deficits that different countries are running, the Fed buying gold the most in 50 years, mining stocks having less gold back in them, this type of a thing. After you've looked below the surface and you've got things going, then you should look at touchstones. And one of the 2 touchstones I recommend is George Gilder's book, Life After Google. How many of you listened to George yesterday? You know, it was almost everybody in here. It was my honor to get to speak with him personally a couple of times over the last couple of days. And I have his book. I subscribe to his new letter. And I believe that he's a futurist, and he's been right so many times, predicting the iPhone, predicting the end of TV as we knew it in the past, this type of thing. And now he's talking about life after Google and life after these companies like Facebook, et cetera, and he tells you why. And he also says there's a real need for a digital metal-backed currency that's not backed by fiat paper, which is only backed by confidence. So I really encourage you to read this book, and also The Fourth Turning is part of your observe part, because it tells you why we're going through this horrendous social, political trauma in the United States and Canada, and to some extent other parts of the world. It's a cycle that repeats itself every 70 or 80 years. We're in the 4th phase of the fourth turning. And if you read this book, and it gets detailed in the middle, so read the first few chapters and the last few, and you'll get 90% of what the authors have to say. It was written in the mid-1990s. They've been right on the money so far. It's a touchstone for me, and I recommend that it should be for you, for your big picture understanding of what's going on. This stuff is going on in Europe now. There are $15 trillion in bonds that have been written at negative interest, where, for example, you take out a loan, and they pay you to take out the loan. I mean, it's insane. They're now started in Denmark. You can get a home mortgage where the bank pays you to take out the home mortgage. And we're probably going to see that sort of thing elsewhere as well, too. And now, since the banks can't make any money, they're talking about charging you if you leave money in your savings account. If you don't spend it right away, they're going to debit money from you. I mean, this is insane, but this is what passes for sanity in monetary expenditure, and this is why people are turning to gold and silver all around the world, because of this ridiculous ideas that the central banks have going on. When you see something in the foreground, like here's Mount Rainier, look in the background to see something else. Don't just focus on what's in front of your face. That can help you spot things that other people miss. Misu no kokoro is mind like water, Japanese. This picture perfectly reflects the sky in the bay, and you can see right here that this is ground right here. This is actually the water reflecting the sky. And when you have researched things to the point that you have a very clear understanding of what's going on and you're calm, this will help you to make better decisions in investing in anything else that you do in your life, whether it's dietary or whatever else. Don't just watch, and never take action. You've got to observe, you orient yourself as to what's going on, and then you decide what you're going to do. And this is a rock where the river's running right at the rock up in Alaska, and it goes to the left and the right. You've got to make sure you don't go straight, or you're going to crash into the rock. It's hard to believe, but salmon actually swim up through that. I've stood on that rock and watched them go up and down in that water, reducing and expanding their air bladders in order to get up there. I don't know how they do it, but I really respect them for being able to do it. Big thing you've got to do is go against sentiment. Sentiment means if you feel like you really have to do this, then you probably shouldn't. It's called FOMO, fear of missing out. If you're a little bit scared about it, you got some little bit of, butterflies in your stomach, and you've done the research, it's probably the right time to take a portion of what you want to take in the market. And that's why most people are not positive sentiment towards gold still yet, and silver. I've seen very few people here that are walking around talking to them. I did a book signing yesterday, and most of them didn't have a clue of what's going on, and they're heading over to Merrill Lynch, to see about opening up an account to buy some more bonds, which are probably entering the 40-year bull market, the end of the 40-year bull market. The stock market itself could go on another year, or it could end next month, but it's near the end of a 10-year, the longest bull market in American history, and people are piling in to buy more stocks. They'll make a paper profit for a while, but when it turns around, the bear market will drop 4 times as fast as it rose. And you saw that 800-point drop a few days ago. More of that is in store in both directions until the market finally decides to keel over. Precious metals and mining stocks are the opposite of that. The sentiment is negative still. People have been selling into this rally of the last couple of months. The smart money is buying it. And that's how you make good money, big money, to go against prevailing sentiment. Get your plan together, work it, and then execute it. This is really true. We're cowards on price weakness, but we have to go against it. Jim Sinclair, who used to be known as Mr. Gold in the 1970s, he said, when I feel like going into the bathroom and slitting my wrists, that's when I know I should be buying. That's a little on the gross side, but it's really true. If you've done the research, but you feel that it's the right time to do it, but you're nervous about it, do it anyway. Doesn't mean go all the way in. It means buy one portion. This is what it's about. It's not a friendly place in the markets. They're not there to treat you well. You either figure out the game or you are carried out on the stretcher. Once you make that decision to make your move, then you think only the cut and you go ahead and do it so that you don't end up in a situation where you don't act. And this is what very often happens. People do the first 3 steps of the Boyd cycle: observe, orient, decide, and they get it all figured out, but then they don't do anything. They're afraid, or they think, well, I'll wait, or I'll wait for a better price. And they wait and they wait and they wait. And people are waiting now. They're waiting for much higher gold and silver prices before they buy. They won't buy today at $17 silver and $1,500 $20 gold, but they'll load it up, everything they can buy at $2,000 gold and $40 silver, they'll be lined up around the block. That's the way it is. And if silver goes where I think it's going to, at 3 digits, when it's $150 an ounce, they're going to be all over the place looking for it if they can find it. This is how things work in the cycle. I love this old Chinese proverb. When the tide is low, the ants eat the fish. When the tide is high, the fish eat the ants. That's the way it works. The sacrifice throw in judo, you go down on your back and you put your foot in your opponent's stomach, you throw him over your head. You sacrifice your standing and your movement in order for the possibility of getting a clean throw. If he falls on you or steps off to the side or you don't get a good hold, then he can beat you. But if you throw him over your back, it's called ippon, and it's an automatic win. But you have to make yourself vulnerable in order for that to happen. And sometimes you have to do that in the markets. We talk about this in our book, Second Chance. Gold and silver are the one ring. They've been money for thousands of years. They're coming back as money again, and you're going to see in a little bit a digital silver program that I'm working with that enables people to bring back silver as real money. Very soon they'll be able to spend and buy these coins backed by a gram of silver on the credit card. Gold is the universal prize in all countries, all cultures, and all ages. And Bitcoin is not going to replace gold, and it's not a war of Bitcoin versus gold. In my view, it's going to be Bitcoin and gold. Supply and demand are one of the things that's going to upend this market and turn us into much higher gold and silver prices. I like this tectonic plate business. So you have demand is a subduction zone going underneath supply, which is on the surface. And these companies are not replacing their metal quickly enough, and the yields are going down, and you have country risk and longer development times. All of these things are arguing for much tighter gold and silver supplies going forward, clashing against demand as more people come into the market, which right now is all in Asia. Very few people in North America are buying the metals. In fact, some of them are actually selling into this rally. It's up about $300 this year, and they're selling into it, and that gold is going to China and India and Vietnam and Malaysia, and a lot of it's going to Germany now, and it's an increasing amount into UK. But in North America, people are pretty much asleep at the switch. That'll change when it gets a lot higher. The reserves, which is the highest level of the 5 levels that is a gold company or a silver company writes about, that's the most likely to be economically viable to dig out of the ground and produce. The reserves have gone down by 26% in the major gold companies since 2007. They need to replace reserves constantly, otherwise they end up with a hole in the ground with no more gold in it, and they go out of business. So they have to get those reserves somehow, and a lot of that's going to be by buying other companies that have found things, juniors, exploration stocks, and all that makes for potential windfall for investors that can figure out ahead of time these companies that are likely to be taken out. Annual gold production has been dropping here. You can see how it's dropped down over the last 6 or 7 years, and it's projected to keep on going down. So the central banks are buying the most they bought in 50 years, even as it's been dropping. The expenditures, the expectations, look how little large gold projects have been discovered in recent years compared to what was done in the 20th century. And that continues to go on in spite of all sorts of big-time spending. Looking for big deposits, they're finding fewer and fewer of them. They're taking longer to develop. Look how long it takes to develop a deposit now, up to 25 years or so after discovery on a major deposit. That's ridiculous. A quarter of a century? That goes through 1 or 2 cycles. Look how it used to be. So these are all things that are pushing in the direction of making it harder to get more metal. Central banks have been buying the largest amount of gold in the last 50 years. They were net sellers for a generation. This is very, very important. This is part of your orienting and your observing space in the ODA loop. Look where all the buying's taking place. 60% of the world's gold goes through Switzerland. It's defined as 4 nines. 9999 fine. The Chinese and the Indians don't want 92% Krugerrands or 94% American Eagles. They want pure. In fact, they're actually melting down American Eagles as part of the process on this. That's all the gold in the world that is produced in 1 year that is taken by those 4 countries, India, China, Turkey, and Russia. They're buying more gold right now than is produced in this current year. Silver, it's the same story. You've got declining production by the major silver companies. They're spending more on it and they're digging up less. Look at the yield. It used to be 13 grams, and it's now down to 6.8. It's declined by 50% since 2005. This is setting the stage for an explosive market when demand goes against supply. Here's a hard rock miner I met a few years ago, really a tough guy, worked in the mines most of his life. He disarmed a couple of live fuses while we were in there with his hand, which he lost some years ago in an accident. Disarmed them carefully so that they didn't blow us up when we were in the mine, so we could finish the tour of the mine. There's all the gold that you see that's ever been produced in that little box on the left. Here's the gold held by the central banks. Here's the derivatives, the paper gold that's been written on it, 1.5 quadrillion. And then at the bottom, this particular one doesn't show it, but on one of my other slides, I had $15 trillion that have been written in negative bond rates in Europe, in the Eurozone, in the last few years, which is not a plus, it's a minus. There's the gold-silver ratio. It's been as high as 94. And again, I thought I had the most recent iteration of this, but we didn't put it in. But my projection, based upon what Jim Rickards talks about, of $10,000 gold eventually. Some people talk about 30 or 40,000. I think 10 is realistic, and it could go to 12 or 15. But let's talk 10. At the gold and silver ratio at 60 to 1. $10,000 gold, that's $166 an ounce silver. At 50 to 1, it's about 200 an ounce, and at 40 to 1, it's about 250 an ounce. I know those figures sound absolutely insane to you right now, but I think they're achievable, especially if we get gold anyways near where it seems to be. And let me share one more thing with you. In 1980, when gold topped at $850 and silver at 50, do you know what the ratio was? Does anybody know what the gold-silver ratio was? If you can do the math in your head quickly, use the two figures I gave you. It was 15 to 1. I'm only talking 40 to 1 to get silver to $250 an ounce with $10,000 gold. We'll see. The love trade, Frank Holmes coined that term, the fear trade and the love trade. The love trade is what motivates most Indians. They don't trust the banks. They need to have dowries for their daughters to get married. They need to have the money where they can get their hands on it, and they buy it, and they wear it, they put it in the ground. This is one of the biggest technical head and shoulders formations I've ever seen. That projects much, much higher gold prices. I hear a crackling sound. I don't know if that's part of this thing or not, but I guess we can put up with it. These are some projected prices for gold and silver. I don't know that we're going to hit those levels. We don't have to make a boatload of money from the mining stocks and from holding physical metal. David Morgan in the Morgan Report, and I work with David for many years. He recommends that you start by getting some physical metal and put it in a safe place, and then put some money into mining stocks, the senior miners, and put some money in the juniors, and put small money into the exploration stocks after you've carefully researched them. And that way you have a balanced portfolio. And these stocks, most of these will go up a minimum of 5 to 10 times during the next bull market. And the ones that find a big discovery could go up 20 or 30 times. So they really have very high leverage with a relatively small amount of money. They are asymmetric trades. And David Morgan, in his letter, which costs $500 a year, and some of these other letters cost up to $3,000 or $4,000 or $5,000. And I believe his letter represents a great value, as good as anything that you're going to see. And I subscribe to some letters that cost 4 times that much, and I still really like his letter, even though I contribute for it. But he is offering at this show or with the next 30 days, if you write to me or him, he will give you a 15-minute one-on-one discussion on the phone with him, which is worth $125. He charges $500 an hour for consultation. But if you subscribe to the Morgan Report. So consider that. I think you'll find it is really worth your money. And a lot of these articles a number of these articles in that little stack I gave you are articles that have appeared in the Morgan Report. This is how people have fared that had some gold over the last 20 years in different countries. Do you know that this last week that the Argentine stock market dropped by, I think it was 48%? It's the second largest drop since 1950 of any stock market in one day in the world. The peso dropped by 30% in one day. So imagine having a handful of silver coins and a couple gold coins, and imagine how that small amount would protect a lot of your wealth when something like this happens. Last year, Venezuelans could purchase 6 months of food with an ounce of silver. They could purchase a house with an ounce of gold. Probably they can purchase a housing subdivision now with an ounce of gold, and probably a supermarket, if it had any food in it, with an ounce of silver, because of the massive hyperinflation that's going on. And ours is more subtle. Our US dollar buys 2 cents compared to $1 that it bought when the Federal Reserve was put together. It buys about 20 cents from what it bought in 1960. So you think, oh, well, the dollar is strong. Well, no, it's not. I bought a Trans Am for $42.50. They made $500 in the first year it was made. They're selling for $150,000 now or so. And to buy a new Trans Am, it costs you about $30,000. Same thing. So that's how much our currency's declined in that period of time. Here's a Venezuelan napkin. I kind of got a kick out of that. They don't use it for money. They use it for a napkin. Gold is broken out at all-time highs against most world currencies. This is more power indicating the strength of the gold market. You think the Dow has gone up a lot? Look at what's happened this century. Since 2000, The Dow is risen about, what, 250%, gold's up 400 and some percent. Even with the correction from 1900 down to 1050, it still beat the Dow. It's beaten every other asset class in the last 20 years. And it's just getting started on its new bull market as the Dow is getting ready for its new bear market, which should shave 50 to 60% off the Dow before it turns around and starts a new bull market, perhaps a decade from now. Richard Russell died a few years ago. He was the doyen of market letter writers. He started in the 1940s, and this is what he had to say about gold. No one has written a market letter longer than Richard Russell, and no one had a better perspective on what's going on. Gold has always turned out to be the last man standing. Here's where you are now, and there's where the last gold bull market went, and that's what we're likely to see again. That's the kind of thing that we're looking at, the profit potential. That's why you should educate yourself on this. Read these articles and do other research and decide if there's a way that fits for you for a certain amount of what you have, rather than keeping everything and depreciating assets. Mining stocks are still cheap historically. There's some of the, as a category, they're the cheapest they've ever been in modern history. When you look at mining stories, you want to try to find people who've done it before. There are people out there that are opening up their fourth or fifth mine. Most people that have projects never even get a mine, let alone 2 or 3. People like Ross Beatty and Rob McEwen and people like that, they've done it time after time. Robert Friedland. Just stunning, the success that they've had. And when they start a new project, chances are it's going to work. And so you might want to buy a few shares because the odds are with you, since you're dealing with someone who's proven before they can do it. This is the type of profit potential you're looking at. This is 2008 to 2013. Look at the percentage gains of some of these stocks. Some of them will do it again, some of them won't. I just chose ones that did it before. That doesn't mean they'll do it again, but some of them are in the process of doing that. First Majestic Silver is an example. You could have bought that for under $2 about 6 months ago. It's now $10. And this is just getting started on these stocks. Same thing with some of these others. This is what happens, a price explosion. You can't predict these things. You're looking at this stock and you go, oh, I'll wait till it gets a little cheaper. And suddenly it doubles in one day. Now what? This is some copper from a very impressive copper deposit in Ecuador. The individual that discovered this is working on it. It's 22 kilometers long. It's a type of copper that doesn't need to be sent to a smelter. It could be a massive discovery and have moved the share price of the company up accordingly. This individual discovered the largest gold and silver deposit in the last 25 years in Ecuador, in the same area at Fruta del Norte, and sold it for over $1 billion. These are the 3 silver and gold buy rules. Start your line with a third or a fourth of what you want. Add a second tranche into weakness. If you're given a chance, buy a third tranche at a huge discount, deeper than you expected. And keep some extra cash so that you can do these things and maybe even buy a 5th tranche if it goes even lower, if you still feel it's a good buy. This is the Bitcoin moment. Silver's going to have a moment like this one of these times. It was trading at about actually it was around $4,000, and this one very well-known writer he said, I think it could go to 6,500. So it went up to 5,500, and he says, it looks to me like it's overbought. I'm going to sell. So he didn't even wait till he got to his original analysis of 6,500. It went to 12,000 without turning around. So this is what happens when something really gets underway and you wait for a correction or you wait for a certain price. Sometimes you're going to wait for the whole move. That's why you have to prepare a little bit early and take an initial position so you'll have something. Bitcoin is a good news for gold story. They complement each other. They're not at war with each other. They do certain things that the other doesn't do as well. So don't look at them as being antagonistic. 100,000 Indians per day open digital wallet accounts. Do you think that that's going to spur them to be more involved with digital currencies? I think so. Here's Argentina. In June, Bitcoin was valued at $20,000 as the peso surpassed the 2017 high that we saw as 20,000 US dollars. And after the 30% discount now, I'm guessing Bitcoin is trading at about $50,000 for the Argentines. They're heading for the 5th wipeout of their currency, which will lose all of its value. That's happened in our lifetime. 2 years ago, they sold 100-year bonds for 7%. Those bonds are trading at 59 cents, and it's a 100-year bond. Are you kidding me? This is the future of money, we believe. This is the Load Cryptographic Silver project that I was kind of referring to a little earlier. This has the AGX coin is the trading version, and the Load token is what built the silver mass. People contribute silver, and they get Load tokens. They buy, when AGX is launched, which will be probably sometime next month, you'll be able to buy AGX coins, which the Load program goes in and buys silver to back those coins. The silver is stored in 7 or 8 different vaults around the world. It's insured and it's regulated, and the silver is there. It backs the currency, it backs the coin, and if you want to redeem your coin for silver, you can do that. So this is not backed by an idea. It's not backed by fiat money, which the Libra coin would be if it's put out by Facebook. It's backed by money. It's backed by silver. The effort is to return silver as money into worldwide circulation. Here's G. Edward Griffin being introduced to AGX Pay a few months ago in Mexico. We had a soft launch at Acapulco this spring. It's private, it's digital, it's low cost, it's high speed, it's redeemable, it's peer-to-peer, which is the idea of blockchain. It's immutably listed on the blockchain. It's going to be silver money for everyone. Eventually, people in Africa can whip out their cell phone and buy AGX coin, or India, or just about anywhere. 62 countries now have contributed investment-grade silver to the Load Cryptographic Silver Monetary System project. And you can see some of the examples of ones there that have contributed. They don't take money from Venezuela or North Korea or a few other places, but just about every other place on the globe, including some little places you've never heard of before, are able to send in money, send in silver or buy silver at the vault and put it in there. We were talking about this a couple months ago back in Connecticut at the Red Pill Conference, David Morgan and myself. If we have time at the end, which I think we will, we'll play an interview where David talks about why he supports the Load project. These are the takeaways from my talk, and by the way, I'm not done yet, but these are some of the things we've talked about before, and you should consider these takeaways as a movement, and the Ripple to Shockwave takeaways is a play on words for the Ripple cryptocurrency. This project is something that I think could revolutionize eWaste production, and it also could revolutionize gold mining. But I'll talk about the eWaste first. These are old computer boards. You have these end-of-life power servers, anything that's electronic that has precious metals in it. Right now, 80% of it is stuck in the ground as landfill. 20% of it is either burned up or to try to get the metal out, or they use all sorts of toxic compounds that create clouds in the sky. Some of the most toxic places in the world are in China, where they've been trying to get the precious metals out of this stuff. I saw a picture of a guy with a bunch of Duracell batteries with wire wrapped around it on a metal stick, and he's holding it out over a fire, and the metals are dripping out in this cloud of stuff, and he's breathing this. That's terrible. This is a food-grade reagent that after grinding these things up into powder, different levels, there's a dry cycle which takes out the aluminum and the copper, most of the copper, and then it goes into a wet cycle into the powdered stuff. It takes out all the gold and silver and platinum and palladium and whatever else other metals is in there, and you end up with an inert powdered product which can be put into the ground completely inert as landfill, or it can be sold to a concrete company. Then they put it in their concrete to make it stronger concrete. So there's virtually a 95% reduction in the footprint of production of these metals. And we're not talking a small amount of metal. You can get anywhere from 75 grams per ton to a couple thousand grams per ton from these different electronic things that are ground up, and no use of cyanide. Does anybody know what considered a good gold mine yields per ton of ore? You dig a ton of ore out, how much gold do you get out of it? Anybody know? 6 or 8 grams, not ounces, grams per ton of ore dug up. This stuff is dozens of times more than that, and it doesn't create any waste. There's taking gold ore, a third-party check on it. How long does it take to get the gold out, and how much do you get using the reagent from EnviroLeach versus cyanide? And in about 5 hours, you get 95% of the gold out, and it takes 30 hours to get the gold out using cyanide, and it's toxic, right? So there you go. Would that make sense to look into something like that? It's about as green a story as you're going to find. Whatever you do, whatever you get involved in, you need to be patient. And this is the thing that I was listening to one of the other speakers earlier talk about. One of the biggest mistakes people are going to make in this bull run is selling too soon. If you get a quality company and you're sure it's a good one and you're sure that you have the right position size, don't sell out on the double and then not have anything. Sell some of it. But these things are going to go higher than you can imagine. Sell some into big strength, but keep your core and know the difference between core and trading positions. And don't give up just before the end. It's been awfully hard for people the last 7 or 8 years. There have been people that have held silver and gold for 30 years that sold it back in the last month. They couldn't take it any longer. That's why you need to sell some into a rise and not hold on to all of it. But you need to use it as insurance first, profit second. These are some of the takeaways. Think about how important this is. You don't want to destroy your psychological capital, because if you do, you can't trade if you've got $5 million in the account. Don't let your spirit be broken. And that means not taking positions that are too large, not buying into rises, buying into weakness, buying into tranches, and making sure your position sizes don't get too far out of balance. The blockchain space is going to change everything. Keep learning about it. Buy George Gilder's book. Buy our book. This is what happens when you go against sentiment. I was in Argentina in 2014, and I was fishing in Jurassic Lake, which has some of the world's largest rainbows. They get up to 25 pounds on flies, all catch and release. The wind is 40 to 90 miles an hour, and you're out there trying to fish in this stuff. I was blown off of a rock into the lake, and the guy that I was fishing with grabbed my vest and turned me around so that I could climb my way up on this rock. And instead of bashing myself into the beach, this big rocks on the beach, I broke 8 fingernails and I gashed my arm and everything. And so here I am the next day. I'm still out there. I fished all day. I didn't get a strike. This is a different spot on the lake. The guide says, close up your rod. We're going to go home. Last day. I took one more cast, 15-pound rainbow. That's what happens when you go against sentiment. I didn't feel like taking another cast, but I didn't feel like quitting either. Keep things in balance. If you get involved in this sector, the potential is you're going to make a lot of money over the next few years. But don't think that money is everything, and don't get greedy, and don't forget the other things that are important in life, like fishing. Go to Billions and Change and look at the trailer for that. It's a wonderful little story. And consider reading the article I wrote a few years ago, More Than Making Money, Living, Fishing, and Investing the Jim Teeny Way. I think you'll find a certain amount of perspective. Like Doug Casey says, there are no luggage racks on a hearse. None. So spend some of that money. Help other people. Help your family. Don't save it all up to the end. Don't reach a point where you figure out how much is enough. That will keep you from getting so greedy that you end up giving it all away. Talk to you about David Morgan's letter. Consider taking a look at the Morgan Report and see what you think. I was at the MoneyShow in Seattle. This is a show I really recommend. I was talking about one of the people earlier today on this. It's costs $800 if you wait until it gets there at the end of July. If you buy it early, you can get it for like $600. They offer discounts, next year. I went to it this year. It's the best show I've ever been to in terms of a specific show. It's not a general show like this one. It's a show about mining sector resources. The only companies there are the ones that Sprott holds shares in or that have invited. So there are no companies that have enough money to get in the door, but they're not any good. These are all high-quality companies. So consider it. That's in Vancouver, BC. It'll be at the end of July, probably next year. It's a 4-day conference. There's our book. Again, I have a few copies left if you want to buy one. And this other one, I wrote a large chapter in about the balanced way of living with, diet and ideas and investment and health and all this kind of stuff. If you guys want to live to be 90, that's great, but do you want to have a quality life at 90, or do you want to have no quality at 70? And you better think about these things ahead of time. These people that are saving up to go into a rest home, don't do that. Don't save up for that. Save that money to get yourself healthy and keep yourself healthy and think properly. You don't want to go to a rest home. You really don't. I put my mother in one 2 years ago, and it was the best one in the area, and there's no place like home. I don't want to go there, and I don't want you to go there. All right, so there we are. Are there any questions?